Welcome to the Listen to This Bull live show. My name is Matt Mulholland. Remington is going to be on in like 10 minutes. He got caught in traffic because he lives in the Atlanta market, and Atlanta market's traffic is the worst in the world. I don't care who you are. I will fight you on that. It's horrible. Glad I'm not in that right now. Somehow I want to go back. We're going to talk about appraisal today. We got Tony DiUlio, which is the only real way to say his name, waiting in the wings to talk about that. But first, I have to push this button. Hey, Tony.
How's it going? Also, I think LA might have something to say
No.
about the worst traffic in the country. So
they're that's bullshit. No, they have the boring company out there or something, right? So they have tunnels. So
yeah, something like that.
So anyway, I got you on here. You've been on the show like 3 times now. It's always fun having you on the show. But what we want to talk about right now is appraisals and specifically appraisal denials. But before I get into that, because I probably have some people that are going to watch this that have no idea who you are, can I have a little bit of a background?
Sure. So my name's Tony DiUlio, as Matt likes to say. I'm an attorney that practices home bases out of Philadelphia, Pennsylvania. I practice all over the country now. I've got claims in 12 different states at this point, and it's only getting further and further. I'm intimately involved with 2 major organizations, APIA, the American Association of Public Insurance Adjusters.
Better MAPIA, pronounced as APIA.
Yeah, that one. And MAPIA as well. And I'm also the one that is running, along with Holly Soffer, the PAGPS conference, which I am super excited about. Round 2 this year. Our very own Matt Mulholland is going to be speaking at that event, and hopefully everybody can make it out October 4th through the 6th. If you don't know about it, check it out, pagps2023.com. I made the site myself. I'm really proud of it.
PAGPS is actually one of the better conferences out there for PAs. We got a lot out of it last year. Filled the room too. It was very impressive.
Thanks.
So
I appreciate that. And it's cheap, by the way. It's really inexpensive compared to other conferences. So that I think
I didn't pay for my ticket, so I have no idea.
Yeah, that's fair. Yeah, but we get to learn from you, so that's even better. Are you going to bring the gun? I really want you to bring the cannon.
It's. We'll talk about that. Because it would require me to drive up there.
Oh, come on.
Maybe.
Think about it. It'll be a big pull.
If I don't have anything within the few days before and after, then I can potentially bring the gun and the whole gantry system, and we could actually fire it off. But if I can't fire it, what's the point, right?
So I'll treat you to the best steak you've ever had if you bring only if you bring it in.
And a Guinness. If you can find a place that'll serve the Guinness with the steak, I'm in.
Deal. Consider it done.
All right, cool. All right, I guess I'm driving up to freaking Pennsylvania or wherever.
Now, more important things. The lovely world of appraisal that we all exist.
Much more important. Ugh. You've been dealing with a lot of appraisal type claims and other shit that goes along with that. But for audience sake, I want to talk about denial of appraisals, and that's twofold. Denying appraisal altogether, carrier saying no, it's not appraisable, whatever, and then I want to get into when an award is set and the insurance carrier denies paying the award. So we'll take that one step at a time.
I've got both of those going on right now.
Yeah. So with appraisal denials, though, I always found that to be interesting because the policies usually state that if you or we disagree on the amount of loss, either may demand appraisal. Yep. If something can be demanded, can it be rejected?
No. So appraisal and all this just as I got to give a little bit brief background because appraisal never used to be a thing, right? It happened in like 1% of cases, and like it was never really something that happened often. And carriers have made this huge push to enforce appraisal provisions under their policies. So it has really been a product of what the carriers have pushed that appraisal has turned into what it has. And then they started not liking the results, right? It was the same as litigation for them, only faster and cheaper for the insured. So they were like, wait a second, this is turning out too good for clients and for property owners. We got to figure out a way to push back. And they've tried to do that both through the use of case law and BS language arguments from the policy and to do things like deny appraisal and put conditions precedent on it and say, oh, we're not going to appraisal yet because we still want X, Y, and Z things. That's not part of the policy. That language doesn't exist. If I want to demand appraisal, you have to put a number on it. I have to put a different number. That's it. Period. End of story. You can want to do all the investigation under the sun after that, but it doesn't change the fact that the policy says, I've demanded it. You give it to me. Period. End of story.
So I come from Georgia, and I'm really looking forward to Remington being on here to really add to this. But in lieu of having a Georgia attorney on the call with us, I'm not an attorney, but there is a case in Georgia called Lamb versus Allstate, where Lamb is the dude who has a few shingles approved on his roof, and he demanded appraisal. And Allstate said, well, no, that's a difference of scope, not a difference of amount of loss. And then Lamb's attorney didn't show up for the appeal. So it was a dissenting argument, and it was a split decision, but it did go in Allstate's favor. And so amount of loss doesn't include differences of scope. They didn't explain what they meant by scope. They didn't say scope of repairs, scope of coverages, scope of damages, mouthwash. They didn't really explain what they meant by scope. So then the carriers, if there is a different line item on your estimate, if you both have Xactimate or something than what they have, they would say that that's a difference of scope, not a difference of amount of loss, and it's not appraisable. And the state allows it. And there's other states like that.
Yeah, and it's really,
okay?
It's such a shame. And it's so bad because all of that bad law, 95% of the time, seems to be being made by bad attorneys or people who just don't do this regularly. Maybe they're a great attorney, but it's just not their area of expertise. It happened, in my opinion, with the COVID cases and the COVID coverage. My firm was one of the only ones in the country to get coverage approved by the court, indicating that there was direct physical loss as the result of COVID. But then all of it, I was literally one of the first in the country and one of the only. And then this slew of case law comes out that says, oh, it's not direct physical loss to have the virus. And now everybody all the courts are kind of latching onto that because there were attorneys who do personal injury work and attorneys that do employment work fighting these things, and it just made bad law. That issue, I mean, it's right in my backyard. New Jersey has the same law as Georgia. Scope is not appraisable, and yet they don't define what scope means. So, we've brought it up in a ton of context where it's, well, what about the carpet? You only want to pay for one room. We're saying it's continuous into the other rooms of the property. Is the carpet fair game? Is that a scope issue, or are we talking price now? Where's the line? Right?
I mean, in Georgia, they almost made every line item its own coverage, and they called it a coverage dispute. I got to tell you, there's only so many coverages that are in a policy. There's coverage A, there's coverage B. If you open up coverage in coverage A, then all that carpet should be appraisable. If any of it's damaged, they've opened up coverages for it, right?
Yep.
Is continuing the carpet an additional coverage? Is every square foot of carpet its own coverage item?
Right. I know it's wild. And
it makes
no, it really, really doesn't. And that's the thing is it's one of those positions that is indefensible, right? There's no real way to explain it. And there's certainly no way based off of the policy language to do it. But yet some courts have just come down and said, nope, it's just about the literally the price of that one line item. If you change anything other than the price of the line item, it's not right for appraisal. And it's really funny. My partner and I have gotten into some disputes because he'll come back and he'll say, well, wait a second, Tony, isn't that good for us as lawyers to have that be the issue? And maybe you could make that argument, but I don't want that to be the argument. I don't want a case that could be resolved in appraisal. I don't want to have to litigate that. It's not good for the client, and it's probably not going to be good for me in the end because it's just going to waste time on something that should never have had the time. So in the end, it's really just harming the consumer, right? The property owner in the end. And it's disappointing, but until I get that right one where I'm going to try to challenge the courts again on it, we're going to be stuck with it in some states. But then you get lucky, right? Then you've got states like Pennsylvania that have come down and said, wait a second, this is a nonsense argument you're trying to make, insurance company. You said the roof is covered, right? We know we've got a covered loss. The storm came by. We know that we've got damages as a result of that. There's damage to the shingles of the roof. The only question is, what has to be done to fix the damage that everybody agrees is there. That's what appraisal's for, right? Everybody agrees there's damage. Everyone agrees there was an event. Everyone agrees that it's covered. What does it take to fix it? Tell me an appraisal.
It's interesting to see some states use appraisal differently. There are states where appraisal is hard to get to, like New Jersey, Georgia, Wisconsin, which all have the same scope issues. And then there are states where appraisal is used against the policyholder, where like Texas and Colorado and Florida, where the carrier is going to be better off if it goes to appraisal than if it goes to litigation because of potential fee shifts or other bad faith type arguments that they might be able to get away from. So it's really interesting to see a public adjuster or a contractor, depending on what state they're from, will either complain that they can't get to appraisal or complain that they have too many appraisals. And I think that's hilarious in some ways. But what do you think appraisal is a good alternative dispute resolution as a whole?
Well, in theory, yes. Without question, it is a fantastic theory on resolving cases. In practice, it's got a long way to go. It's so interesting because there was a debate on one of the forums the other day about appraisal and how it differs in some states. And I know Sarah Parker at Kuva Media, and she's a public adjuster as well. If you guys don't know Sarah,
she gave you a bone. She just
she
posted.
did?
You guys should check out Tony's webinars.
Oh, all right. Well,
And
hey,
she's
look at that.
right.
Thank you, sir. If you guys don't know, if you're watching this, I do completely free webinars available on YouTube, Facebook, and our website, just talking about the industry, claims handling, policy interpretation, real everything. Check it out. But regardless, Sarah was talking about the process that she has for appraisal and how there's literally one day where everybody goes out, has a meeting, and then you get an award with either by the end of that day and everyone agrees to it, or it goes to the umpire and they assign it in like a week. I mean, it blew my mind.
The umpires there at the same time?
I'm sorry?
Umpires there from day one at the same time?
I don't know. I honestly don't know if they're there from the beginning, but it was the fastest I had ever heard. I'm sure she can add, if she's on here, she can, I'm sure, add in the actual process. But it was the fastest thing I'd ever heard in my life. And she actually wasn't happy with that process, from what I gathered. Sarah, correct me if I'm wrong, but she said that there were problems and gaps within the appraisal process as a result of that speed. And for us out here, I'm dealing with appraisals that are taking upwards of a year to appraise. And it's unbelievably slow. And it never should be, but it's either appraisers are overworked and spreading themselves too thin, carriers delaying the situation, them just non-responsive appraisers on both sides. And it's a huge problem, not to mention the contentious nature of umpire selection nowadays. That there are just so many flaws that are being put into this that really appraisal feels like it's just becoming adjusting 2.0. And that's not what appraisal is supposed to be.
It seems like in states like Louisiana, where we've seen some bills come out, states like Texas, where the appraisal provision is used to kind of skirt any bad faith type issues from carriers, as long as they pay the interest along with the appraisal award, then they can't get bad faith on anything. So being like that in certain states, they are using it as a way to adjust the claim appropriately if they didn't do it right the first time. If you look at some of the policies that are out there with these 3-page appraisal provisions, the appraisers are required to do more than what the adjusters are required to do. What's the point of sending out an adjuster? Have them do what the appraisers do, and you'll probably have a great claim.
It's amazing how many stories I've heard about a public adjuster will call me and say, the carrier's adjuster in the field tells me that they agree with me, and then will tell me, but I am not going to get approved to write this. I have to send it to appraisal just to get the thing that I want to cover anyway covered and paid for. And that's insane to me, right? How are we at this point where you've taken out the actual decision process and the adjusting aspect from the adjuster and just said, oh, you're not going to be able to do this. Send it to the appraisal to properly adjust the claim. Like it's ludicrous.
It's bullshit. It's absolutely asinine. A policyholder should not have to pay an appraiser to gain the benefits of their policy.
Yep.
And if that, and that's such a regular thing, but without any kind of, it's all hearsay. So we need that kind of thing in writing or on recordings in a state where you can record in order to prove that kind of thing happens. And then we need a Department of Insurance that cares.
Yep. And
And a
I'm
lot of
actually
times they
working.
don't.
Yeah. And that is so true, because these departments have the power to help and adjust these processes to make them effective and help the policyholder, which in the end, in the kind of utopia world of this, in the perfect world, everybody is trying to help the policyholder, right? The carrier should be there to help the policyholder. The public adjuster should be there to help the policyholder. The department should be there to help the policyholder. And yet somehow it feels like we're all on different pages. And I don't know well, I do know what happened. It's all about the money, but it really becomes problematic when the system gets set up in such a way that the only one that ends up getting harmed is the policyholder, right? Because they have to pay those extra costs now. They have to bring in everybody, pay an umpire, pay the appraiser, and just to get to that right result.
I feel like if the insurance company has to file for appraisal, I think that the insurer should pay the costs as a whole personally. But that'll never happen because it's supposed to be an unbiased thing.
Right.
Appraisal was not used this way in the past. In fact, when I was a young PA and a contractor, I'd never even heard of appraisal until probably 2013, 2014. And it was the first time I ever had a claim where I needed to actually go to appraisal. I think it was a contractor at the time, but I'd never heard of any claim ever needing that kind of a thing. It was just something that had never occurred from 2007 to 2012 ever.
Yep.
And then it became more of a normal thing, especially if there was a discontinued shingle. If we had, after Lamb versus Allstate, if we got to appraisal, we would just get to appraisal anyway, and the appraisal award would come out and they'd still pay it, even if they only named it as, on the memo would say, we're only appraising this so much, they would still end up paying it. And then at some point they stopped paying it. And we're not going to get to that point just yet.
Yep.
But appraisal has almost become, I don't really know why, it's become so prevalent in claims handling. It's become so normal. It's like every third claim has appraisal involved.
Yep.
It doesn't make sense.
No, and it really comes down to it becomes a weapon for the carriers at this point, rather than a tool of resolution, right? It should be used to help resolve claims and do it expediently and get to the right result, but only when necessary, right? The concept of adjusting claims before 2010, 2012 was the adjusters did that. They adjusted a loss and came up with that resolution. That just started to fall apart even more so in the 2010s, so that the carrier started pushing this appraisal as another avenue to delay the claim, right? We had attorneys like myself who were pushing back and saying, carrier, why are you adjusting this loss for a year and a half? You're taking too long. Now they create another facet of a quote unquote legal way to delay a claim further, cost the insured's money, do things like not pay for overhead and profit, or not pay for an extra $1,000 here or $2,000 there, and just make it impossible for anyone to recover appropriately because appraisal became too expensive and time consuming, litigation was too time consuming and costly, and they're just left holding their hands out without enough to fix the property.
So if you're in a state that can have appraisal, doesn't have the Lambie-Allstate type of language, the anti-scope language, which, for shits and grins, let me tell you something. Sidebar here. Zell is the firm that Steve Badger works for. Zell was proposing some language in Texas for a new bill for appraisal. And part of that included some information about the word scope, and that they didn't want new scope items that weren't presented before appraisal to suddenly appear in appraisal. And this is the way that he explained it to me. He said, we don't want that shed that was never mentioned to have had damage on it to suddenly show up in the appraisal award where no one ever claimed that to begin with. So it's stuff that was never claimed before. And in that regard, it's innocuous. That makes sense. Sure. We shouldn't have, the appraisers aren't there to claim additional damages. They're there to appraise the damages that were claimed, right?
Can I pause you for a second?
Yeah.
But what if the shed was damaged by the storm?
What if it
Right?
was?
Wouldn't it be right? Isn't the right call here, right? Aren't we all trying to just figure out what is the right answer? I did a panel that was run by Brad Hayes and Angela Henderson, where the whole talk was all about appraisal, and we focused really on the fees for appraisal. But one of the things that came up was appraisal has a right answer, right? Every claim has a right answer for what is it actually going to cost to fix the damage that was actually caused by this loss.
So, Remington,
what's going on, guys?
Not much. So shouldn't that be the goal? And look, I get it. And we can certainly get into a deeper conversation about the shed. But if the shed really was damaged by the storm and the appraisers did figure that out, I don't necessarily know that it should be excluded.
it shouldn't be. And that's the thing. That's why there was a bill, right? Because it can't be excluded at this point. But imagine what would happen if that language were to exist. Even if it is about the shed that was never claimed, suddenly, if scope is no longer appraisable, additional scope that was never discussed before, how do you identify what was approved or what was identified beforehand? What is scope? And how does a policyholder identify what the scope is? When they claim they have hail damage to their home, they're expecting the insurance company to come out and investigate to see what was damaged. They're not expecting to have to do their own investigation to see what was damaged necessarily. Do they have to do that if scope is not appraisable? It sounds like they do. So, Remington, we mentioned Lamb v. Allstate earlier. We're talking about appraisal denials and appraisals that get denied, that you cannot appraise property, just to catch you up a little bit. And apparently New Jersey is one of those states. Wisconsin is one of those states. Georgia is one of those states. There's one other. I want to say it's North Carolina, but they don't really seem to apply it if it is North Carolina. I could be wrong.
It's absolutely ludicrous. I truly, just because property insurance is not as prevalent in Georgia, and I can't talk to about the other states. They just got it wrong. Like, they just got it wrong because they don't understand. They don't understand it. Not to mention plaintiff's counsel didn't show up to the Court of Appeals, so that didn't help. But anyway, it is, yeah, no, they got it wrong. And hey, if you think about it, like, you go to appraisal because there's a dispute over the amount of loss, right? That's just big picture on it. So typically there are two estimates out there, one from the policyholder, one from the carrier, typically, right? Because that shows the dispute. To me, that's where that's where the appraisers hone in on the scope versus go on like a witch hunt. Like, how are they supposed to go, look everywhere else? I don't know. I'm just kind of, that should be a guide for them at least,
Sure. And I've had the debate because I've gotten some appraisers involved, and they said, well, wait a second, the adjuster on this, the public adjuster, missed a ton of stuff, right? For one reason or another, they didn't have a continuous flooring or issues with, the siding or the wrap behind it, whatever the case may be. And they've asked me, like, is it okay if I've got something on my estimated part of the appraisal that isn't part of the public adjuster's estimate? I said, if it's part of the claim, yes, you're committing any kind of fraud. You're not doing anything wrong. As long as you can justify its association with this loss and it being causally connected, put it in. That's what your job is, to figure out what the right number is, because to restrain yourself to potentially someone who is doesn't do a good job with the adjusting side of things could really cause some problems. But here's where the rub came. What happens when the appraiser for the carrier wants to take something out, right? Is that okay? I've certainly made arguments that it's not, but I could, you kind of have to have it one way or another. Either we're limited on both sides or open on both sides. You can't just have it your way all the way.
That is a good question, though. I mean, if the appraisal happens and they appraise it and the award comes out less than what the carrier had initially offered, does the carrier get to be absolved of that liability? I mean, if they've already made a payment, they definitely can't take the payment back. But what if they haven't made a payment yet?
Yeah.
It's a good question. So each individual item could be its own coverage in so many ways. If they're going to say, well, I'm not going to pay for this, even though it was already paid for, is an item then an actual coverage? Yeah. Because we just argued that it wasn't. And now I want to argue that it is.
I know.
So you have a good
Isn't that
point.
interesting how that plays out?
Right.
You can-
It depends on the situation. So, there has to be some kind of consensus. But so
But there's
ultimately, though,
There's not a
if there
consensus.
is a dispute over the amount of loss, is that always just a dollar amount for the same scope of coverages and scope of repairs?
No.
Amount of
can't
loss
be.
is going to have to equate to other things. It has to.
Yes. Right. Because the alternative is the ludicrous, right? The other concept of, because appraisal is all about, we disagree as to the amount of loss, right? That's the rub. I say that this thunderstorm caused $100,000 worth of damage. That's the cause of the loss, the thunderstorm. You say the thunderstorm caused $10,000 worth of damage. The amount difference there is $90,000. That is what my appraisal should ideally resolve, is that dispute. Not, hey, is your $10,000 for those items the appropriate cost for the items that you wrote? It's adding in provisions of the policy that simply don't exist.
Originally, appraisal was really designed when someone had a contractor and they had a bid for work that the carrier was reasonably liable for. Then the carrier didn't write an estimate. They had appraisal available in case they felt like they were being gouged. It was a provision that was in the policies for the insurance carriers to verify that they weren't going to be gouged by some contractor, because the policy clearly states that they are going to pay what's reasonably necessarily incurred or spent or whatever. So the appraisal provision was really designed to protect insurance carriers and policyholders, but mostly insurance carriers. And it became so different once the carrier started writing their own estimates on almost every claim, which happened when, Storm Ventures Group started pushing the contingency contract, and no contractors ever wrote estimates anymore. So it's kind of the industry's fault. But I
and it's been
digress.
around, look, this all comes, appraisal was in the 1943 New York Standard Fire Policy, which has become a baseline for a lot of states to say, here's your minimum coverage, right? This is what you on a bare minimum need to supply to people. And with all of these amendments, we've gotten into legal disputes over whether some of these policies actually meet that requirement, because the appraisal provision limiting it more than this is a reduction of coverage that doesn't actually meet that state standard. So, unfortunately, we've always settled those cases because the carriers don't want, they don't want to take me to the appellate court. So they resolve them. But that is one of those main issues, right? Are we actually reducing the coverage of these policies by trying to limit appraisal and saying, hey, you can't appraise scope. We're just talking about our dollar value, not your dollar value. It's absolutely
That's
crazy.
a really good question. Appraisal is an alternative dispute resolution process. It's not a coverage. So if you remove appraisal, you don't necessarily remove coverage, but you do remove some of the power and leverage that a policyholder may have. Is lack of leverage or reduction of coverage? I think that it'd be easily argued that it isn't really a reduction of coverage, but it's an interesting argument. You definitely take away consumer protection.
You're taking away a benefit. Right. And if it is a benefit, if it's a benefit that can be used on behalf of the policyholder, then it's something that is the minimum standard, in my opinion. There's a lot of things in the New York fire policy. There's the suit provision that's actually in there as well. It's not a coverage, it's a requirement within the policy, but it's a minimum standard. And to reduce that minimum standard reduces the policy's value to the insured, and therefore it is improper if this is the baseline for your state.
So in Georgia, there was a bill that was presented that GAPIA backed last year. It was the year before. Might have been the year before. It was the same bill that Louisiana had passed unanimously, and it gave language that defined the word scope so that we would attempt to get appraisal back enacted in Georgia. And it had a lot of support, 18 different sponsors of the bill from the Congress and Senate. But then once Allstate and State Farm's lobbyists found out about it, suddenly the chair of the insurance committee shut down on us. And then Remington got into a meeting all by himself with these lobbyists on behalf of GAPIA. And I don't want to steal the whole story from you, Remington, but it goes into the fact that they're afraid of the word scope. So what really happened back there?
I think it goes back to what I even touched on earlier in the conversation is that, and I don't want to throw anybody on the bus, so I'm not going to get too detailed, but
Did put you on the spot.
they don't understand property insurance. Like they just don't. Like they don't get it. And so I was trying to do property insurance 101 while arguing and advocating for policyholders in the state of Georgia, in a room with the 7 most powerful insurance lobbyists with the chairman. And, we were in there for 3 hours. Hey, we got some code out of it, but they weren't touching the appraisal, and I just explained that, Georgia they're one of very few that are doing it this way. And do you realize like it would prevent policyholders from actually hiring me? Like I'm taking business away from me because they can go and they can do the ADR route by me going to appraisal and their claim's over with. But now they can literally deny every claim in Georgia they can prevent it from going to appraisal. They really can. Every single claim if they want to. What does that do? Makes us a little busier, but there's claims on my desk that shouldn't be there. And that's what I was trying to explain to them. And they were like, well, what are you getting out of this? I'm like, I'm not getting anything out of this. Like, I'm truly not. I'm not getting paid to be here. I'm just telling you, I'm in federal court in 7 different states right now and across the country. And this is not how this should be done. Just really explaining it to them. And, of course I had case law from all the different states and just trying to explain things, but that's an uphill battle. That's for sure.
They really don't want to define that word though, do they?
No, not at all. Not at all. They want to skirt it. They don't want to define it. So, just giving away my secrets, but it is what it is. That's why we're on Listen to This Bull. And, I am transparent and more open about things. I go to appraisal in Georgia with my memo, and it's got to be a memo signed by both appraisers, and then we can go because it's an agreement outside of that policy that they're hanging their hat on case law for this policy language. So I make them sign a memo. It's another agreement. If they want to breach that, we got another action if we need. But Matt, you've been involved in that with me.
Let me give a little bit of background on the appraisal memo for the newbies that are out there. When you demand appraisal and the carrier writes you back and names their appraiser, oftentimes most of us stop reading at that point. Don't stop reading. Continue reading that letter because they're going to, in that letter, set the appraisal memo or whatever it is that is going to be appraised. And there's an agreement that they're trying to make with the policyholder. If you move forward, you might be agreeing to that memo the way that they have a set on what is being appraised. If you continue reading and then you disagree, no, I want to go to appraisal for everything, or the policyholder says, I want to go to appraisal for the entire thing, then you don't have this limited appraisal to happen, or it will prevent them from being able to deny some of the award later on that we're going to get to in just a second. So what Remington has done, and he's done this for a few of my larger claims for me, he's helped a claim get to appraisal in a state like Georgia by having a negotiation on what is appraisable with opposing counsel. And he set it up with his own appraisal memo on what's going to be set. So just give a little background on what an appraisal memo is in case you didn't know what that was. Do you do the same thing, Tony?
Absolutely. So we've had a number of claims where that exact issue comes up, and I'll get it. And I'll say this shouldn't be in my hands, right? This claim shouldn't be in a lawsuit. I shouldn't have to do discovery on it. This is absolutely nonsense. So I will inevitably have to file a writ or a complaint to get the case moving. And I'll call the defense attorney as soon as they enter. And I say, look, before you even file an answer, can we just talk about potentially sending this thing to appraisal? And let's just come to an agreement as to what that means. Because Remington's 100% right. If you don't come to that agreement ahead of time, you are in the wild west of that appraisal. And they can just do whatever they want and try and limit it and say, we're not discussing the whole roof. We're only discussing these 10 shingles, or, we're not discussing all the hardwood floor, just this one room. And you've got to come to that agreement ahead of time, because honestly, if you don't, you're just going to be right back in that courtroom anyway. And all you've done is wasted more time and money for the insureds. So it can go a long way. And I saw that comment. I'm glad you put it up there. This isn't something. This isn't, in insurance regulations. This isn't part of the policy. This is something that Remington has created himself, and that we do as attorneys. It's just, in essence, a separate contract with the carrier saying we're all on the same page as to what is about to happen with appraisal. So you don't need to have appraisal memos in your state or not. It's literally just another agreement between the parties.
Yeah. And in Texas, everything's appraisable anyway. So of course you don't have it. You don't need that crap.
Right.
Good for you, I guess.
And I want to give Matthew credit about the whole appraisal memo, because I'm telling you, it's been very successful. But me and him worked probably 2 weeks straight on the exact language that we wanted in this memo, to the T. Do you remember that, Matt?
Yeah, the first one we did together like that. But the opposing counsel was very semantic driven anyway, so it was necessary to have it be exactly right.
Yeah.
But yeah,
semantics get us to the second topic. Are we ready for the second topic?
No, hang on. I got a question or a comment from the audience that was really concerning. Here it is from Adam Scott. He's starting to see carriers use managed repair programs, probably in Florida because that's where he works, to deny appraisal. You guys ever seen that?
Not up here, but we don't. Managed repair isn't utilized up in the Northeast. So I've never had someone.
Managed repair programs are usually an optional repair where the carrier gets to hire their own company to do the work, but it's optional. A lot of policies do have a non-optional clause where the carrier gets to decide that they are going to make repairs instead of paying for the repairs. But this is something that's separate. When we talk about managed repair, especially in Florida, it's usually an optional thing. And because it's optional, it skirts the unfair claim settlement practices law about having processes in place to verify the workmanship of the insurer-owned contractors. But those optional things, man, they definitely throw a wrench in the works. Doesn't mean that the contractor doesn't still have to do everything correctly. But if they were to, instead of going to appraisal, and if they were to instead say, we're going, or you should use our managed repair program, I don't know how they would use an optional thing because the policyholder still has to agree to it. Are they basically stating, and maybe we need Adam to add on to this, are they basically stating that they have a contractor that will do the work for that price, so we don't have to go through all this process and therefore save your money on not having to pay for appraisal?
And Matt, there's some policies where it's not optional. The carrier can demand, that
very rare, right?
Right to repair. In Florida,
it's in policies. It's in a lot of policies, but it's very rare that they'd actually use that. You know, they usually have a certain period of time, like 30 days after they've made a decision on coverage or to name that they were going to be doing the work. And a lot of times they bypass that, and then they'll later say that they will, and it's too late at that point.
Right.
But yeah, whenever I hear managed repair program, that's the right to repair, what you're talking about. The managed repair is usually an optional program. Citizens has one, things along those lines. So
that is
all
correct.
Right. Outside of that, then I do want to get into the award being denied or partially denied. How often are you two gentlemen dealing with awards that are partially denied?
So it doesn't actually come up that often. I far more likely to just have carriers deny the appraisal in general and say we're not going. But it is certainly becoming more prevalent than it was 2 or 3 years ago. And I have one currently ongoing with your favorite law firm that you mentioned before. Where
Adam, just to get, so we don't get too far away from what he had said, he actually wrote a little bit more. He says, this is a non-optional managed repair program. So this is one of those right to repair deals. If the homeowner were to, let's say, repair a cabinet and was not part of the original scope and happened 11 months later with no other repairs made by the managed repair program, the opposing appraiser noted the cabinet repair, reported it to the carrier, and the carrier filed for material breach.
I'm not following that.
Let me unpack that.
Yeah.
Homeowner repair cabinet was not part of the original scope. No other repairs made other to damaged cabinets, I guess. They repaired a cabinet separately. Opposing appraiser note that they did a cabinet repair and claimed that was a finalized repair. How is that a material breach? Dude, I'm going to have to get more information from Adam, and maybe we talk about that as a separate conversation, because that doesn't make sense to me.
No, it does not.
All right. Never mind. All right. I didn't mean to interrupt you, Tony.
No worries. So we're definitely seeing it more often. I was just going to say, I've actually got an active one now with your favorite law firm that you mentioned earlier, where it was a large award down in Virginia. They came back and decided, based off of the appraisal award that was, by the way, we got signed by the umpire and one of the appraisers, that they were reducing the value of the appraisal to the pricing from the date of loss. They were using the same scope, using Xactimate, and using a price list because the claim was at that stage almost 4 years old. So they were using a price list from 4 years ago to reduce it by about $1.8 million of a reduction as a result of using this price list, despite the fact that we have an appraisal award signed for a certain dollar value. And they kept coming back and saying, well, it's measured as of the time of the loss. I said, that's not what your policy says. The total value of the property for purposes of determining coinsurance is at the time of the loss. The damage amount is based off of whatever the estimate is in the appraisal award is. There is no restriction saying it's at the time of the loss within the policy. And they are fighting tooth and nail on this but they have no basis within the policy to do it. They just don't want to pay the extra $1.8 million because they're pissed that they lost the appraisal.
Have you seen Chip Merlin's argument on at the time of loss at all?
I'm not. Actually, I've not. I didn't know Chip had.
This is brilliant. This is brilliant, and because at the time of loss to a layman would mean either, the day that the loss happened, whatever the pricing would be at that time, right? But that's not what it says. It says at the time of loss, not immediately following the loss, not after the loss producing event, not before the loss. It's at the time of loss. There is no other time of the loss other than while that loss is occurring. How much would it cost to have materials and labor there at the same time that the loss is occurring? Astronomical fees, astronomical costs.
Impossible. It's an impossibility.
It would be impossible, right? I love that argument because that is what the words mean.
Right. That's when we get to the literal meaning, right? If we take the words to their extreme on the literal meaning, I don't disagree with that at all. But at the time of the loss, in almost every policy, doesn't actually refer to the damages and the repairs that are to be made. Most of the time, it's referring to the coinsurance and whether or not the value of the property at the time of the loss is properly accounted for based off of the premiums and the policy limits. And I drew all this out for the defense attorney, and they were just like, nope, it just says at the time of the loss. I'm like, you want that to mean one thing, and it just doesn't say it. And I'm sorry, but you're wrong. So
they're trying very hard with that language for sure.
Yeah.
ACV benefits are usually paid at the time of loss. They figure out what RCV is at the time of loss minus depreciation. ACV benefits paid out at that moment. When you have RCV coverages, most policies will then make it whatever the amount that is actually necessarily spent or the amount of replacement cost value, whichever is lower.
Yep.
And that causes some confusion in itself. But the amount that's actually necessarily spent is obviously down the road when the work is actually completed. So RCV is usually recalculated once the RCV benefits are claimed down the road after the work's been completed. And it can't be claimed before the work's completed anyway. So there is some language in ordinance and law about at the time of loss. It has to be any enforcement that occurs at the time of loss, not enforcement or new building code that comes into play before you've made repairs, but the loss has occurred in the past. So whatever the language is at that time for the building code at that time, it can't be upgraded after the point. But outside of that, I don't know of any other at the time of loss languages in a policy. I think you're right about that.
Yeah, and because what it comes down to, and I'd share my screen if I could, but there's the provision that they always talk to is the valuation condition, right? This valuation condition within the policy generally says that we will determine the value of covered property in the event of a loss or damage as follow: at actual cash value as of the time of loss or damage, except as provided below. Fine. The problem is there is a distinction in the policy, and if you guys look deeply in this, there is a distinction between the value of covered property and the amount of loss. Those two things are actually different within the policy. Look, I know. See that face? That's the face that surprises everybody. If you want to know why, if you go to the co-insurance provision, you know how they always give those examples on a co-insurance provision. You know, for example, if your property has a value of 250,000, loss is X, you know, coverage is Y. Here's your penalty. In that example, the first thing that is on there is the value of your property, the value of the covered property, and that's the total. That's, you know, my house is 250,000. And then at the bottom is the amount of loss. That's a different number. And the example that I've got is $40,000. So the value of my covered property is distinct and separate from the amount of loss.
Sure.
The valuation,
even appraisal, you can appraise both more often than not. You can appraise the value of the home or the amount of loss.
Exactly right. And that's the whole point. So when they're talking about the value of my property at the time of loss, they're talking about, for purposes of determining my co-insurance, what is the value of my property to see if my co-insurance is proper, not what is the amount of my loss.
So when you said the value of the loss is different from amount of loss, either you misspoke, I think.
Yeah, if I misspoke, I apologize. The value of the property.
Value of the property is definitely different. I'm with you on that.
The amount of loss.
Yeah. So the amount of loss, and a loss, it would include damages, but it would include financial burden that isn't necessarily tied to damage as well. So it would include indirect losses more often than not. So amount of loss could include many different things, ALE benefits. But the value of the risk or the value of the property is definitely an appraisable thing. Getting an appraiser to do both at the same time is dumb as hell, because you want them to make the value of the property very low in appraisal, but the value of the damage and loss very, very high in appraisal. That's hard to do at the same time.
Yep. Yes, it is.
So it's usually good to do both, or separate those appraisals.
Yeah.
You'd have to have a memo to agree. We're just appraising this, right? There you go.
There you go.
Yeah, and that's only one way they do it, right? I've had other ones where they've come through and I've gotten an appraisal award and they come back and say, okay, well, here's your award, but we're not going to be paying for X item of that award because we're determining that that's not associated with this loss.
I've gotten awards for full roof replacements in Georgia, and then they pay some arbitrary number without any explanation, and it's a percentage of that. And I have to assume, after Lamb versus Allstate, that they determined there was 5 damaged shingles. And so they took our award and they divided by the number of shingles on the roof. And then they multiplied by 5. And that's how much they paid from the award. You ever had that happen without any explanation whatsoever?
I don't know if I've ever had someone try to reduce an award without an explanation. I mean, that would be tough. That would be really hard for me to stomach, because most unfair claims practice acts require that there be an explanation of benefits that are paid. So I would find it really difficult for a carrier to come back and say, oh, here's a dollar value, but I'm not telling you what we're paying for it. I mean, it would be so hard to justify. I can't. I mean, it wouldn't surprise me, but it would be difficult.
I mean, ultimately, when that kind of thing happens, there's only one thing that you can do. I mean, you have to sue. You have to.
Yeah.
So the appraisal language isn't binding a lot of times in the policy language anymore. They have the right, and usually so the last paragraph or the last sentence of the appraisal provision, it might say something along the lines of, we still retain our right to deny the claim or coverages. Right? So is that okay? The departments of insurance have generally accepted that language or allowed it to be sold in that state. Does that mean that appraisal isn't binding?
I'm gonna say there's 2 things that I think it's complete BS. I do. Number one is it says the right to deny the claim. So why is coverage in appraisal anyway, right? They're already accepting that there's a covered loss if it's going to appraisal, right?
Right.
So to me, that's number one. And then number 2, think about what it's doing to policyholders. The regular homeowner that has to hire an appraiser. If it goes to umpire, then pay the umpire, and then the insurance carrier saying, we're not going to pay out on this award. That to me, it's ludicrous. It really is.
Yeah, because now you're just forcing them to incur additional costs with no intention of actually providing coverage. I mean, it's a scam at that point, right? I mean, you're really
It should
just
be automatic bad faith.
yeah.
That's the way I see it.
And we've always, anytime that has come up where they try to not pay an appraisal award, I can't think of one we haven't resolved, including bad faith funds, because it's always so egregious. Those cases where they refuse to go to appraisal in a state that they're not allowed to, and when they try not to pay an award. I mean, that's when I actually considered a good bad faith case versus, every time an adjuster calls me and says, "Hey, Tony, by the way, I've got a great bad faith case for you." Everyone, I don't know why everyone thinks every case is bad faith, no matter what I tell them.
Every single one.
They're not all bad faith. I don't know.
Maybe they are. Maybe they're all bad faith. You just suck at your job.
I'm absolutely.
It's good to hear you say that, because Matt will tell you, I'm an advocate for like people need to calm down on the bad faith thing. I mean,
Absolutely. Not
I get the same shit, guys. When someone comes to me for consultation, they always say the same thing to me. I feel your pain. All right. They definitely, they think everything is beyond egregious. And it will depend on the state on how bad it is. So let's start tying some stuff together here. If you're in a state where scope is not appraisable, is there a way to get to appraisal on the whole thing anyway?
Only through what Remington does and what we do through a memo that everyone comes into an agreement outside of it. Other than that, you can't force it. And I wish you could, but you can't.
I agree.
Okay. There is a strategy that I've seen employed, and tell me what you guys think about this. If it's most of the people that come to me are about roof claims. I feel like I'm always talking about roof claims. If there is 5 shingles that are damaged and that is a repair only, and the carrier says we're only going to appraise these 5 shingles. If the contractor were to put together an estimate for 5 shingles with a dollar value of the full roof, which is actually what the RCV of those 5 shingles would be anyway, and then they try to go to appraisal, is that okay in your mind?
It's clever. I'll give you that. I've had scenarios where, and this is actually one of our good bad faith cases that happened recently, where the carrier denied appraisal in New Jersey because of scope issues. So the public adjuster went and got a contractor and said, "Contractor, here's the scope from the insurance company, right? Here's their list. I need you to tell me, based off of just doing the things that they're going to do, what's it going to cost to do that job?" And put an estimate together. They send it into the carrier, say, "Okay, we now have your exact scope. They used your scope, and here is their dollar value for that work. It's different." And the carrier said, "We're still not going to appraisal." Right? That was, I think, a solid. I know it's a solid bad faith case because we got bad faith money, but that was a good bad faith case. If you were to come in and say, "I've got 5 shingles to replace, and to replace those 5 shingles is going to cost $25,000," it's one. I get it. I understand the argument, but it's one of those things that just doesn't sound right to me. Right? It doesn't like pass my
optics aren't great. Yeah.
I don't know. The concept is good, but I'd have a hard time selling it, I think.
People did that for, I would say, about a year in Georgia. Some of them were kind of getting away with it, but then, of course, the carriers caught on. It's misleading, in a sense. I mean, everybody knows what's going on.
It is and it isn't. So I'm going to argue for it for a minute, and I could argue against it too, just so the audience is aware. I'm not choosing a side here. I see both sides.
Plain devil's advocate.
When you're talking about the direct physical loss of a shingle, it would include all damages that occur unavoidably during the repairs. And so the cost of replacing that shingle would include the cost of replacing the additional damages that occur. When you get to the point where it is cheaper to replace the whole roof versus repair, and that's where my argument starts breaking down, then you're still talking about a scope of replacing the whole roof because it's cheaper than to repair the one shingle. So if you're arguing that the one shingle costs the replacement of the roof, that is in itself, I tend to argue against it more. I can't even make the argument fully.
It's hard.
So it isn't, because the repair cost is still going to be a different value. It's going to be whatever damages occur as a result, and you can make a repair. Eventually, you're going to replace all the shingles that get damaged. What is the cost of that at a per shingle basis? make that cost the actual dollar amount of it and let them say, well, it's actually cheaper to replace.
Yeah. And the one, again, I think it's a hard sell for that, but you can use other aspects of your state's either Unfair Claims Practice Act or maybe in your policy. So New Jersey is a great example. In New Jersey, they've got one of my favorite portions of an unfair claims practice statute that I've ever seen, where if you have a contractor who writes an estimate for the work that's being proposed by the carrier that's higher than them, the carrier has to give you a contractor who will do it for their price. And we've actually used that to say, look, we can't repair these 5 shingles. Our contractor says to do it's going to cost an astronomical amount of money. I need you to give me a contractor who will actually do this work and warranty it. And when you put them to that test, they can't get you a contractor. I mean, they'll never find you a contractor who will actually go through with the repair. And you use that instead to expand the scope and then go to appraisal versus, some other gamesmanship with the estimates.
Gamesmanship. All right. So ultimately, optics are bad if you just claim that 5 shingles cost $35,000 to replace. Yeah. So I get that. But if that's the only way to go about it, what is there that people can do? Are you saying that they need to get an attorney involved to set a memo?
I don't want it to be the answer. And I honestly don't think Remington does either. I don't want to put words in your mouth, Remington. Yeah. I wish we didn't have to say, yes, you have to contact an attorney, but you do. And look, neither of us, again, I know Remington said it and he wasn't here when I said it, but it was reassuring to hear him say the same thing. We don't want those cases, right? We don't want to have those on our list. We want them to be resolved in appraisal, but we also don't want people left just holding their hands out. So it sounds to me like Remington, like my office, is willing to step in and do one of those letters and get a memo out there and try and negotiate an appraisal so that it can at least get done without having to go full litigation.
Memo's the only way, Matt. Memo's the only way. I mean, really, and you're protecting, the policyholders protecting themselves. They're going to, if not, they're going to get shafted. They're not going to get a full roof or whatever the, the scope is that they're looking for. And it sucks, but it is the truth.
I mean, it does suck because not only are you getting an appraiser involved, which is going to cost you the appraisal fees, you're also getting an attorney involved. And even if most attorneys are going to reduce their fees for pre-suit kind of stuff like this, there's still additional fees on top of all that. And all because you are dealing with an insurance company that is acting in bad faith. Can we still get bad faith after the fact?
Not if coverage ends up getting granted and you get paid what you're supposed to. I mean, I know people have tried to fight it. I've done
it's the reality. Yeah.
But the reality is if you're getting paid what you're supposed to get paid and doing it through avenues of the policy that allow it, or even through other negotiations, you're not going to get bad faith. At least that's my experience. I don't know about you, Remington, but
so reality is
there's the only thing I can think of, the exception is in Florida. If you have a civil remedy notice that's filed, it expires, then they agree to go to appraisal and they pay more on the claim, but that's all gone now. The new Florida law has eliminated that, but Hurricane Ian is subject to it. So
in Texas, it would still be something that you could file against, but if the insurance company pays the interest that had built up to the point of the award, then they get to skirt the additional, the additional case issues, the additional bad faith and all that kind of stuff. So it isn't worth going. It's an alternative dispute resolution for a reason. It's to negate having to go to suit. Yep. There are policies that require you to go to appraisal before suit, though.
Yeah, but at least up here, I know Farmers has that in some of their new forms. I've actually never seen it enforced within the court. So that might happen, but it just hasn't happened here yet, to my knowledge, where a court has actually upheld the enforceability of that language.
How does that even work? Like, let's go to appraisal. Let's all come to an agreement, and then let's go sue each other. What? How does that even? It doesn't even make sense.
Policy.
Am I missing something, or does it not make sense?
No,
okay.
It doesn't make any sense because it doesn't result. That's the whole point. And that's the argument we've always used to get around it when a carrier's tried and the courts agree it's not a final resolution. We're literally just wasting time because we're going to be right back here. Why don't we, if we're going to be in court, let's just do it and be in court, right? Why would we ever go through that process first? And the courts have always agreed that it's a waste of resources.
Yeah. And exactly right. I mean, think about what a policyholder is going to have to come out of pocket $5,000 just to go file a lawsuit, right? Because you got to pay your appraiser and stuff. Like it's nonsense.
Yep. Completely.
Yeah. I don't know why they even allow that kind of language in the policies. It doesn't even make sense. It's not going to be, not going to be required by the court. But if you don't get into an attorney, you're kind of in that situation. But anyway. What's better, going to suit or going to appraisal with farmers? That's a good question.
What was the question?
What's better for farmers policy than going to suit or going to appraisal? If you're going to pick one.
Under farmers policy, it both sucks because farmers policies don't cover anything. But that's just my 2 cents.
That's one of the few policies where it says that you cannot demand appraisal after the suit limitation period has expired either.
Yeah, state. Oh wait, after suit limit, really?
Yeah.
Okay. That's good to know.
Yeah. Anyway. All right. It's been an hour. We gave you guys a ton of nuggets. It's been a great episode. Every time we get into appraisal, man, it's a lively debate. We didn't even have a lot of questions. That's kind of crazy, but we still had a lot of engagement. So I really appreciate you guys being on here. Real quick about the sponsors. Claim Titan, if you are a public adjuster, is probably the best CRM that you can get involved in. Eric Davison of Claim Titan is actively making changes to the program as needed. So if you want something new in there, just talk to the guy. He's put every single thing that I have asked for into that program. And sometimes within 10 minutes. It's amazing. Building Experts Institute is a school that I'm involved in, online education. You can get a membership for $109 a month and have access to every online go at your own place course, including the Defeating Unethical Engineer Tactics class. So if you're dealing with engineers, you want to check that out. American Policyholder Association, that I'm sure several of us are involved in. Are you a part of that, Tony?
Yeah.
American Policyholder? Yeah, so I thought so. All three of us are a part of. This is a fraud fighting group of individuals that are fighting against insurance fraud committed by insurance carriers, which is very hard to do, but there's so much going on now in Florida with it. They're doing a great job. Huggins Law Firm, that's Remington's company. Remington, I'll let you take that one away.
Hey, everybody, Huggins Law Firm. No, hey, I was just at Naples Town Hall. That's where I flew in from. They had a town hall meeting in Naples, and I spoke down there about hurricane awareness and everything else. But, we concentrate on the Southeast and, represent how many now, Matthew? Thousands and thousands of policyholders. But it's great to be a sponsor. Listen to this bull.
Absolutely. And then Hook Agency, if you're a roofer, Hook Agency can help you with your marketing. So if you are a roofer, they do marketing for roofers specifically, and they do a great job. Tony, you want to talk about Wheeler, DeIulio, and Barnaby?
Oh, the firm, yeah. So my firm is Wheeler, DeIulio, Barnaby, wdblegal.com. But truthfully, I'd rather talk about PAGPS. Again, I really just want people to come and have an opportunity. You get a number of classes from myself. Matt Mulholland, again, is going to be teaching there as well. But really, you get an opportunity to have these flushed out discussions, learn a ton of information in the industry, get CE credits if you're in one of the appropriate states. But you can also sign up and not pay for the CE credits and just come and learn a lot. So please go and check it, pagps2023.com, and really hope to see you guys there.
In case you guys aren't getting that acronym, it's public adjuster and then GPS, like navigating. Okay. That's what it's supposed to be. It's not a weird acronym with weird shit.
Greater Public Adjuster Greater Philadelphia Summit. That's what the
you ruined it.
Sorry.
Now it's just about Philadelphia. It doesn't work. It doesn't work.
Greater Philadelphia.
Right. We will whatever. They're not that great. They're not shush. All right. We'll see you guys next Tuesday at 4 p.m.
Really?
See
you next Tuesday? That's how you're going to leave people?
It's the worst sign off in the world. I don't know. I can't think of one.
See you next Tuesday. Everyone.
Yeah. I don't do anything in between the Tuesdays.